Hello traders, the title of the video is a Londoner applies Elliott wave principle to Tame FTSE 100 index. Alright. So this is the FTSE 100 that represents the 100 blue chip stocks in United Kingdom. Alright. We are on a monthly chart. I have enough data, I think so, from 1989. Alright. Because I'm still during my first 30 days tries with TradingView. I've already subscribed, but I also got 30-day trial. Or is my data being limited? Is that all right? It looks to me since 1989 we have data here. It's good. It looks to me that this is the first wave. All right. If the data that I have here is not sufficient, then we are just talking about speculative Elliott wave trading. All right. So suppose that the data that we have here is correct, is enough. We'll call this one the first wave. All right. So is this the end of the second wave? Because the vertical line that I put here is the reference point for 2009, when the S&P 500, the market, and other major stock indices, okay, began a bullish trend. If you look at this session here from here going up, it doesn't look very convincing as a bullish trend. It's going up though. It doesn't go up. It's not dynamically bullish. You see here, this session here looks more like an impulse wave, and this session here doesn't look very much as an impulse wave. But don't run away yet, because the step that we follow, we do what we call preliminary wave count, then the Elliott wave validation, and then we go into the mind of other traders. Go into the mind of other traders, meaning that we want to analyze the chart from the viewpoint of other Elliott wave traders, so we may compare our own wave count to the others. That's what we are doing. So don't run away here already yet. If you think that, George, what you just said, I can't stay here and watch the full length of this tutorial. All right. The question is this the end of the second wave? I'm not convinced. All right. Or the next question that we can ask is the third wave for this FTSE 100 still underway? Will it continue to go up, up, up to form a fully fledged third wave? So those are the two specific questions that we should take into consideration when we are looking at the FTSE 100 chart on the monthly chart. Right. It is the second wave. Will that supposed to be the third wave continue? Why am I asking the second question? The reason why I'm asking the second question is that according to our Elliott wave count guidelines, all right, talking about 2-4 Elliott waves, if the third wave failed to go above the 161.8% Fibonacci extension level of the first wave, it's not a third wave. In that case, it is only a portion of a bigger correction. Did you get that? Normally, a normal third wave should extend up to 161.8% Fibonacci extension level of the first wave. So when we see something that we are trying to call or we are labeling third wave, we need to compare it and see, does it go above the one, does it reach at least the 161.8% level? But there is another verification that we taught traders, that if the third wave, if you are labeling anything third wave, and that way that you are labeling third wave fail to go above the 138.2% Fibonacci extension level, all right, of a prior impulse wave, in this case above the 138.2% Fibonacci extension level of the first wave, that cannot be called third wave. In fact, it's a general rule for impulse wave, talking about the third and the fifth wave. So here, if we are calling this third wave, apart from the 161.8% verification that I've already mentioned, the first verification, or the most important verification that we must do, did it go above the 138.2% Fibonacci extension level of the first wave? Here, it did not yet. Can you see the 138.2%? No, you cannot see. It's somewhere up there. But you see, if I bring my line down, look, if I push it down, you'll see soon. You see it's coming. You see 138.2? It's here now. Yeah? Which means it did not, if you push it to the top here, it did not go above that 138.2% Fibonacci extension level of the first wave. So at this point in time, as I'm speaking to you, I am completely reluctant to call this third wave. It has failed to go above the 138.2% Fibonacci extension level of the first wave, and it did not even, okay, a second, it didn't reach the 161.8% Fibonacci extension level. So as long as that thing that people are calling out third wave failed to go above that 138.2% Fibonacci extension level of the first wave, it is not an impulse wave, according to our wave count standard. Oh, yes. We can be proud of ourselves. Yes or no? Okay? So, that's why I'm asking the second question. Is that a third wave still underway? Will it continue slowly but gradually? Probably when the S&P 500 is finally developing, okay, its own fifth wave, will the FTSE 100 finally break above 138.2% Fibonacci extension level of the first wave and reaches the level of 161.8% Fibonacci extension level of the first wave? If that does not happen, if what people are calling out the third wave does not cross that 161.8% level, that 138.2% level, the critical level, 138.2% Fibonacci extension level. For new trader, you may wonder, Joe, why are you talking too much about 138.2% level? Well, go to www.dayprotrader.com and click on 138.2% Fibonacci extension, so you may understand why that Fibonacci extension level is just like a powerful, okay, a key level that one cannot ignore. So traders that are following that for a year already understand that. So I'm speaking to new traders now, okay? So where we are now with the price structure currently, I cannot call this second wave. Cannot put it, this one here second wave. If I put it here, I'm assuming that probably the third wave will continue. So a trader, if the second trader is saying this is the first wave, and that second trader said this is the second wave, that second trader is assuming, is expecting the third wave to continue and to break 138.2% level, and maybe to go a little bit near that 161.8% level, even continue to go above it. Then we can call that the third wave. If that does not happen, what we will say to trader, we will say to trader that this is the first wave, all right? And the correction that has started since 2000 is still underway, and we will be talking about a flat correction, an expanded flat correction. So this session that is coming down, all right, if, remember that, that's why I'm repeating myself, if the third wave does not continue, this move down will form the C wave of the gigantic flat correction. So the gigantic flat correction, you may say, what is it? You may say, 1, 2, 3, the A part of the flat correction. Then this will be another gigantic 1, 2, 3, which is not very clear, 1, 2, 3, up here, messy one. Right? Sometimes they probably do something 1, 2, 3, or it will do 1, 2, 3, 4, 5, 1, 2, 3, and then 1, 2, 3, 4, 5, up. It's still 1, 2, 3. So I'm repeating myself because corrective wave is about 3. So gigantic flat correction, you may say 1, 2, 3, and then this session will be another 1, 2, 3 up, and then the price coming down here will form the C wave of the flat correction. Feel free to disagree. We are talking about two types of traders that are counting wave. One is saying that this is the second wave. That trader is expecting the third wave to continue. The second trader says that no, probably if they're supposed to be the third wave could not go above the 138.2% Fibonacci extension level of the first wave, we'll be talking about a flat correction. Another trader may disagree and say, Joe, it's not a flat correction. But whether he is saying something else, he probably another trader may say this is a WXY wave. So this is a W here, George. This is the X, a trending fair that has failed. So there was a trending fair. Then we have a correction, George. Can't you see that? And then we have the price going up. People think there is a trend. The trend has failed. And this is now a W. So another time I say this is W, S, Y. What? Another thing I may say, George, no, that's not a W, S, Y. This is just a smaller one. The bigger W, S, Y. Wave, all right? Another may say, oh, the correction between the two vertical lines, this is the W. What we are looking at now, this is the trending fair that has failed. So this is the X. What you are expecting as a C wave will form the W, George. So all in all, one is talking about a smaller WSY wave, another is talking about a bigger WSY wave, and I'm talking about a flat correction. But remember, there is no big difference. They are all talking about what? A correction. We can't deny it. So there was a trending flash, and we all expecting a correction. All right? The person that is taking off a bigger WSY wave will be expecting a Y wave, which is a pullback here. The flat correction trader will be expecting a C wave here. All right? If the person that is talking about a smaller WSY wave is here, calling this second wave, he or she will expect the price to continue to go up more. So, if the price, which I said before, I'm saying again, because it's too important for this tutorial, if that third area wave does not go above the 131.8% Fibonacci extension level of the first wave, we cannot call it third wave. We'll only talk about a correction, saying that the correction has started in 2000, is still going on today, and we will see more move down. All in all, we have finished our area wave forecast. We are expecting a pullback in the shape of a C wave of the flat correction or a Y wave of a bigger WSY wave. Okay? The only group of traders that are giving us a bit of headache is those that are calling this point the second wave. But we can't ignore them, because if the S&P 500 is printing the fifth wave of a higher degree, the FTSE 100 may continue to go up. We need to be patient, even if you are expecting a C wave or a Y wave, because if the S&P 500 begin to print the fifth wave of a higher degree, the FTSE 100 may continue to go up. Then, if you break above that 131.8% Fibonacci extension level of the first wave and headed towards the 161.8% key level of the first wave, then we can label it the third wave and a projecting for the fourth wave and the fifth wave of a higher degree. I have repeated myself many times in this tutorial for a purpose, because I don't want traders to forget what we are talking about, because the structure of the FTSE 100 is completely different from the NASDAQ 100, the S&P 500, the Nifty 100, and also the Sensex. Do you see that? You should be able to spot that now. Can you see the difference? All right, still in a funny shape. Is it because of the Brexit? All right, we will see. So after finish our forecast, so we quickly go on to the yearly chart. How does it look on the yearly chart? Can we get additional information on the yearly chart? So you went up on the yearly chart and then you pull back, you see? So you then now, after pulling back like this, you done 1, 2, 3. So on the yearly chart, it's confirming more the flat correction than anything else. Yes or no? All right. There's not much I can say apart from that. That's the only thing that I can say on the yearly chart. Have we got enough data in this case? Trading view traders? All right. Okay. So now, how do we get paid? How do we make a decision to buy and sell? So you may say, George said it will go down. George said there's a high chance it will go up if the third wave continue. How do I use that information? Very good question. You will map out the chart. You draw a trend line, and you will use the pitchfork tool. The reason you want to do that is because you want to find a higher probability setup around those key levels so you can implement a different time frame trading method to time the market. If you forecast the market that the market will go up, you want to receive a buy signal before you buy. If you projected that the market will go down, you want to receive a sell signal before you sell. This is about market timing. And the tool that we use is what we call a different time frame trading method. For new traders, you just use to search the phrase top-down trading method by 24 stock trader YouTube channel. DG2, DG4 stock trader YouTube channel. You see a playlist of 5 videos. Alright, so I'm going to start drawing trend on my chart without too much long story. I'm speaking to new traders that have been following us for years. They say, George, move on, move on, move on, move on. Alright. So we draw this point, we connect it to the second point there, alright? And now we don't know this is yet the top of the third wave because we can't call it the third wave yet. What can we do? Alright, another trend line, because there's a procedure that we follow, we talk about it. Check the video about success. Alright, check the video also about a Nifty. I discussed those things already there. So this is a good excuse to recommend those videos to you, so you understand how to draw that trend line also there. So all you are doing, you are just mapping out the chart. Because the third wave is not completed yet. Normally, if the third wave is completed, we'll connect the high of the first wave and the high of the third wave, you remember? And also, if the fourth wave is completed, we'll connect the low of the second wave and the low of the fourth wave. All right? Those are the methods that we use, the strategy that we use to connect, the key level so we can map out our chart. Now, because those waves are not yet on this chart, I will use, again, as we always do, to the data following us. You see, you are maturing without feeling it. You are now a professional area way trader. You can be proud of yourself. Okay, we can put it like this. First one, so we play with the P42. You put it. For new traders who do not know about P42, go to www.dayprotrader.com. Click on Andrew P42, and after that, click on P42 Trading at www.dayprotrader.com. So, first point, second point, third point. 3 points we need to draw the P42. The P42 has a median line. And that median line is divided in the P42 into 2 halves. This is the lower half from here down to here. And that lower half also has a median line. That's the green line here. Then we have the upper half, the blue line, and this median line here. And the upper half also has a median line, which is this green line here. But 3 points we need to draw the P42. The P42 will determine the possible path that the price will take, the trajectory of the price. In a bullish trend, if you see a rise in P42, the price should stay within that rise in P42. If it starts coming out of it, we will say that the bullish momentum is diminishing. For the FTSE 100, you can see that it was within the boundaries of that P42. Now it's coming out a bit. Right? So the trend line that I draw here, very close to the price like this. See, this one is coming down. Watch out for that trend line. So this exercise, after forecasting the market and analyzing the chart using the Elliott wave principle, you must map out the chart to determine, to highlight the high probability the setup that often occur around key levels. Between 2 lines, there is always a median line. So you see that you see between the green and the blue, we can draw another median line like this. Is that too much to ask? Or are you feeling like unsubscribing already? All right? It's something like so. All right, I'm moving on. Okay? So the green and the blue has also a median line. That's what I'm just pointing out to you. You can see the price final resistance. I'm apology to trade it, and here the median line of this section here, the lower half of the lower half. Okay, and I'll watch out for that. Okay, I'll remove that line now. Okay, oops, all right, bring it back my piece for 2 at least. Okay, so draw them, and now you can see, okay, you see, that's what I say, you see the blue line and the red line here, that blue line and that red line. Nothing should stop you to draw another median line between the two. The median line are powerful tool. They are all over the place. You can draw them between two trend lines, between two horizontal lines, between two trend lines. Okay, you see? But when you are drawing trend line, what I just mentioned to trade, that's why I'm recommending the video about Nifty 50 and success to you. I say to trade, do not forget also the horizontal key level. See this one here. The top of the first wave is a resistance. So it break below it now. It break below it. Is it going to come back and retest it before continue to go down, or will it find support on the edge of that trend line there, or will it going to push it down? So don't forget when you draw your trend line, okay, don't just completely ignore the horizontal lines, the horizontal key levels. Okay. And then just leave them on your charts. Why do you need to leave them on your chart? Because you will need them. The price will form, okay, high probability to set out, okay, on here, one of those key levels. And pay attention between the intersection between two key levels. Okay, those are hot spot trading zones. So there was one here, intersection between the red and the orange. All right. So we map it out. There's one support level, which I want you to understand, this one here. Watch out for that level, because the price in the vicinity of that, I'll call out that support level. Okay, level of 6734. That's where we are now. It's sitting on it nicely. 6734. 6734. So support. We see this high here. All right. Don't forget that. All right. So now you map it out. So now this is, I'm on a monthly chart. Before you can make decision on a monthly chart like this, you want to wait for that monthly candlestick bar to close. All right. It's already closed because today is Sunday. Okay, today is Sunday. It will close on the 31st. Tomorrow is Monday. Monday the 31st. Wait for the monthly candlestick bar to close and then implement a different time frame trading method. All right. So that's what you want to do in order to get paid or to time the market accurately. All right. So all in all, the wave stretches of the FTSE 100 are different from the wave structure of the Success, Nifty, NASDAQ 100, and S&P 500. It's a bit strange, all right? Bit strange. But all in all, we see the first wave. The question that we have, will the third wave be formed? Meaning that will the third wave finally go above the 138.2% Fibonacci extension level of the first wave and continue to the 161.8% Fibonacci extension level of the first wave. If it fell, the current price structure failed to go above the 131.8% Fibonacci extension level of the first wave, we'll be thinking of a flat correction, expecting a pullback, all right? But if the third wave continues and finally is in place, we'll be expecting the fourth wave and the fifth wave. With the price structure that we have today, we need to be a little bit cautious if we are very, very bullish, knowing that we haven't yet crossed the 138.2% Fibonacci extension level of the first wave. That's a critical resistance level. In order to time the market correctly, one will draw trend line, like I put this pitchfork tool. Okay, like I say, play with it. Okay, you can put in different places, so I can put it here like this. Change my second and the third point. So first point, now I'm choosing this as my second point, and this is my third point. Now I have a new pitchfork tool. You can see that the price just crossed below the median line of my new pitchfork tool. So if you break below it, watch out for that. So play with your pitchfork tool, move it around, okay, so you may see everything, okay, that is happening right here. Another trader may move the pitchfork tool again one more time like this, selecting another low point here, this one here. So that will be 1, 2, 3. And again, you want to pay attention to the key level. You see now it's again on the edge of that pitchfork tool. And all you are looking for is a trading setup around a key level where you can make a decision, looking for trading setup. If there is a valid trading setup, you implement a different time frame trading method to time the market. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. If you think that this is an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I really love traders that are sharing our video, and I say to you, thank you very much. If you have not yet subscribed to our channel is 24 Elliott Way. Subscribe today and stay put, alright? And be sure to click on the notification bell, so anytime we are about to live stream a pre-recorded video, you will be the first person to be notified, so you may know the time when the recording will start. Sometimes I post video first on Facebook, sometimes first on YouTube. Our Facebook page is stochastic-market. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about a Londoner applies Elliott Way principle to Tame FTSE 100 index. Happy to meet you all, and I will speak to you soon. Thank you for watching.